Let me tell you then, understanding money markets can open up new avenues of investment opportunities for you. Money markets offer individuals like you and me a chance to dip our toes into a low-risk, highly liquid investment pool. It's a way to keep your money safe while still earning a return. It's all about preserving capital while squeezing out some extra return on your hard-earned money. So, why not explore this avenue and make your money work harder for you? Money markets are the unsung heroes of the financial system. Seriously, they don't get enough credit. They keep the gears of the global economy turning by providing a constant flow of short-term funding. Businesses use money markets to manage their working capital, while governments rely on them to cover short-term budget gaps. But here's the kicker. Money markets play a crucial role in determining interest rates. You see, the rates at which money market instruments are traded directly influence the cost of borrowing for everyone, from individuals seeking mortgages to giant corporations issuing bonds. It's all interconnected. Now let's talk Turkey. Money markets aren't exactly a walk in the park. They present unique challenges that investors need to be aware of. One word: complexity. The sheer variety of money market instruments can make your head spin. Another challenge: interest rate risk. Like any fixed income investment, money market instruments are susceptible to fluctuations in interest rates. When rates rise, the value of existing money market instruments can decline. But don't worry, you can always learn strategies to mitigate these risks. Let's break down some of the stars of the money market show. These instruments are essential for managing short-term liquidity and ensuring financial stability. Now, first up, Treasury bills or T-bills. These are a cornerstone of the money market. These are short-term debt securities issued by the US government. They are sold at a discount and mature at face value. They're considered one of the safest investments on the planet. This is because they are backed by the full faith and credit of the US government. Next, we have commercial paper. This is another vital instrument in the money market. Think of this as an IOU issued by a big company, like a short-term unsecured promissory note. It's a way for businesses to raise short-term cash, usually to fund day-to-day operations. This helps companies manage their cash flow efficiently. Then there are certificates of deposit, or CDs. Offered by banks, CDs allow you to lock in a fixed interest rate for a predetermined period. You leave your money deposited in the issuing bank. They are considered a low-risk investment option. The longer the term you leave your money deposited, the higher the potential return on your deposited money. This has made them an attractive option for conservative investors. And finally, money market funds. These funds are a great way to diversify your investments. These funds pool money from multiple investors to purchase a diversified portfolio of money market instruments. They say this financial vehicle can reduce risk and enhance returns. MMFs offer instant diversification and professional management. This makes them a convenient option for investors seeking stability and liquidity. Now for the million-dollar question, why bother with money markets? Here's the lowdown. First, liquidity. Money market instruments are highly liquid, meaning you can convert them into cash quickly and easily. This is crucial for those who need immediate access to their funds without any hassle. It's like having a financial safety net. Next, safety. Money market instruments are generally considered low-risk investments, especially those backed by the government. This makes them a reliable option for conservative investors. They're ideal for preserving capital and protecting your hard-earned money from market volatility. And finally, short-term returns. While they may not offer the eye-popping returns of the stock market, they do provide stability. Money market instruments provide a steady stream of income and the potential for modest capital appreciation. This makes them attractive for those looking to balance risk and reward in their investment portfolio. Listen up, folks. Money markets shouldn't be your entire investment portfolio, but they can play a vital role in diversification. Think of them as the rudder or the anchor that provides stability and liquidity to your overall investment strategy. By allocating a portion of your portfolio to money markets, you create a buffer against market downturns, ensuring that you have access to your capital when you need it. The saying goes, investing is a marathon, not a sprint. And maybe money markets can help you stay in the race. Until the next video, happy investing.
This is not financial advice.
Ever find yourself lost amidst the cacophony of the stock market? It's a common conundrum. The stock market, with its ceaseless oscillations, unforeseen events, trends, swings, and conflicting counsel, can turn anyone's world topsy-turvy. But there's no need to fret, grasshopper. Today we're on a trip to make sense of this financial labyrinth. To kick things off, let's decode the basics. The stock market is a marketplace for the trading of company stocks, pieces of ownership in a company, and other financial instruments like bonds, which are essentially loans made to companies or the government. Then there are options, contracts that give you the right, but not the obligation, to buy or sell stocks at a set price, and futures, contracts obligating you to buy or sell stocks at a predetermined price and date. Now, it's not enough to just understand these concepts. Staying informed is pivotal. The stock market is influenced by a host of factors, from company earnings reports to global economic indicators and even political events. So, keep abreast of market news and trends. Knowledge, after all, is power. But, as you arm yourself with information, don't let your emotions take the driver's seat. The stock market can be a roller coaster ride, and it's easy to get swayed by the highs of greed or the lows of fear. Keep a cool head. Impulsive decisions can cause more harm than good to your investments. It's said that investing is more of a marathon than a sprint. Then it turns into a relay when you pass it on to the next generation. So, patience and discipline are the cornerstones of successful investing. No empire was built in a day, and neither will your investment portfolio be. Lastly, don't shy away from seeking professional advice. A financial advisor can offer valuable insights and guide you based on your specific goals and risk tolerance. There's no shame in asking for help. To sum it up, understanding the basics, staying informed, keeping emotions in check, practicing patience, and seeking professional advice can help you decode the seemingly chaotic world of the stock market. So, thank you for spending time with us. Don't forget to hit subscribe for more insights and not financial advice on conquering the stock market. Until next time, happy investing.
This was not financial advice.
Talking about the future of money? What if the US dollar gets dethroned or just switched out? Will we enter into an era of central bank digital currencies, or CBDCs? CBDCs are digital versions of fiat money issued directly by central banks. Imagine using all digital dollars or euros, just like Bitcoin, but backed by governments. For years, the US dollar has been the king of global finance. But there are growing concerns about its dominance: rising debt, geopolitical tensions, you name it. Enter digital currencies, like the trend Bitcoin started, but now central banks are catching up with their CBDCs. China, the European Union, and the US are exploring this tech. So what happens if a global CBDC comes into play? It could revolutionize international trade, reduce transaction costs and time, and offer more financial inclusion. This could mean no more waiting 3 to 5 business days for transactions to complete and funds to be available. But it might also shake the very foundation of the current economic system. What do you think? Could a global CBDC replace the US dollar? Drop your thoughts in the comments and hit subscribe for more financial entertainment.
This is not financial advice.